HDFC Life and CNBC Awaaz present BIMA SABHI KE LIYE.
Hello and welcome to a special show BIMA SABHI KE LIYE, brought to you by HDFC Life and CNBC TV18. Now, the way a customer is able to access insurance today has changed tremendously from a few years ago. From relying on insurance agents, brokers, direct marketing, or even branches to service customers earlier, now insurance companies are moving their products and offerings online or digital. Now, what has helped this? The fall in data rates, the affordability of smartphones, the rise of social media and the internet. All of this has given customers the access to a wider variety of products and services and the ability to interact with them online. Therefore, a seamless multi-channel distribution strategy, which is also in sync with customer tastes and preferences, has become very vital. To discuss all of this and a whole lot more, let me invite a special panel of guests today, starting with Sandeep Ghosh, the consulting partner and national leader insurance at EY India, Harshvardhan Roonta, certified financial planner at Roonta Securities, Gaurav Mashruwala, the financial planning expert and author of Yogic Wealth, and Suresh Badami, the executive director of HDFC Life. Thank you so much for joining us here and giving us your time. Mr. Badami, let me begin by asking you, since you're the insurance guy here, agents used to play a huge role in bringing in new customers and servicing them. How has the pandemic changed all of this?
Firstly, I think a lot of us knew that insurance is needed, but the level of necessity and the need for what the pandemic did for us in the last 1 year in terms of bringing about awareness and a lot of customers to actually look at it very, very seriously. India as such has been a very underpenetrated country when it comes to insurance, whether you look at it as a percentage of a GDP or in terms of the protection gap. So while, over the years there's been a lot of investments, frankly, the growth has been there, but not really as what we probably deserve as a country. So a few things which happened during the entire pandemic was clearly the initial part. There was a heightened awareness on term and health policies because people realized that they needed to protect their families and themselves by ensuring that they don't spend money in terms of, health expenses and outgo. And similarly, that if something were to happen to them, because really nobody was aware in terms of what kind of an effect the pandemic would happen, and it could happen to anybody. And it didn't necessarily mean whether you had been healthy. If you had got the pandemic, since there were no vaccines in place, people were worried. So the initial 2-3 months actually in this entire pandemic went in terms of ensuring the safety of all our employees, our customers, our financial consultants, and trying and servicing the customers who are already on board with us. Thankfully, a lot of effort that we had done on digital and technology ensured that our existing customers were able to be serviced end to end, whether it was in terms of maturity or whether it was in terms of claims, whatever came in during that lockdown period. But then as we settled in and we understood that, look, we need to start working on remote, all the previous investments that we had made in terms of technology kind of helped us, right? And where we were able to reach out to customers. So there were two things that happened at that time. Obviously, there was a fair amount of awareness, but along with the pandemic came a little bit of uncertainty in terms of whether people would have job loss or their businesses would suffer. So insurance, as you know, there are clearly the term kind of products which lead to mortality, and then there are the investment kind of products. So there was a little bit of a slowdown on the investment side. And on the term side, while there were people who were wanting to come and buy insurance, they needed to go through medicals, which was again a problem given that people were in lockdown and people didn't want to go to hospitals at a time when, you were worried about what would happen to you. But as the quarter things progressed, I think people understood that, look, one, from a distribution point of view, that these products are available digitally. A lot of the other distributors, whether they were banks or whether they were financial consultants, were able to reach out to the customers on remote and do an end-to-end sales and servicing of their customers. So, quarter 2 progressively was better than quarter 1, and so hence Q3, Q4. And as we exit in Q4, I think things have changed a bit. So now what has happened is there is the heightened awareness, and people, because the economy is slowly coming back and life is coming back to normal, also have the ability to pay. So as we sit today, there is a combination of both the awareness as well as the ability to pay. And I think insurance is probably right poised to make sure that every customer who was otherwise undecided about it is looking at newer propositions which are coming into the market. So, and a lot of things which otherwise were happening in a very different manner, thanks to the COVID, have now moved digital. And I'm sure as we talk further during the show, we will probably cover that.
Well, absolutely. As you say, the ability to pay and the desire to pay, both of that is coming back with the unlocking, with the economy picking up. Sandeep, let me bring you in then. What have you seen during this pandemic? How has it affected how customers are buying insurance and where they're buying insurance now?
So, I think the first big change that we noticed was, and Suresh alluded to it, was just the sheer level of awareness of the importance of insurance. And I must stress the importance of adequate protection, because very often in India, insurance has also been synonymous with savings and investments and not as much with protection. Whereas what you really needed during the time of the pandemic was a term cover in case of loss of life, adequate health cover in case of hospitalization. So, I would say the combination of the awareness of insurance as well as the importance of having adequate or sufficient insurance cover was kind of, came home to roost in the minds of the consumer, and people, who were sitting on the fence, who hadn't given this an active thought, irrespective of age group, really started gravitating towards ensuring that they had adequate cover. Now, in terms of distribution channels, one must still remember that when it comes to life insurance, the only product which has significant pure digital sales, was term covers. So term covers was something which over the last 10 or 15 years has been actively bought by people online. A lot of the other products still didn't have acceptance in terms of online selling. But again, sometimes we confuse digital with 100% online selling. What one has to understand is that digital has permeated bancassurance, agency, direct selling as well. And the way that has happened is that these channels have what we call assisted mediums. So through mediums like what we are using today for this interview, through video calls, chats, and a number of other means, the distributors are able to interact with the customers without necessarily sitting face to face with them. And sometimes, all the help that you need in terms of explanation of product features, and benefits and all of that can be done in a virtual medium, and people have opened up to that, because, especially during the days of the lockdown, it just wasn't physically possible to go and have a face-to-face meeting. And even today, people may not be comfortable, having people visit them at home or walking into branches where it can be avoided. So, pure digital online sales is still less than 5% of the total volume, and probably even in value terms, it's in single digits. That has not fundamentally changed. But what is really happening is from sales to servicing to claim settlement, the evolution of technology, of apps, and various other methods of making sure that people don't have to walk into a branch, people don't have to have a face-to-face meeting to be sold a product or to be serviced for an existing product. That is something which has really taken off. And people in the industry joke that, what corporations and leaders could not do in terms of digital adoption in the last 5 years, the pandemic has done in 6 to 9 months. So there has been a phenomenal uptake and adoption that has taken place. And it is actually happening across age groups. I mean, obviously, it's a lot easier for the younger generation to adopt to digital, but just as people have done with Amazon and Flipkart, people are also understanding that banking, insurance, and other financial services can be availed in a contactless environment.
Harsh, well then, let me come to you then. I think phygital is what Sandeep was referring to, but the way in which insurance is now being sold online more versus, say, physical channels because of the pandemic and other reasons, how has that changed customers' perception about life insurance products? Because, we often hear the industry complain that at the end of the day, these are just reluctant customers. So how is the conversion rate improving, or how has that perception of the product changed?
So in fact, Ritu, this pandemic, specifically during this period, we've seen insurance companies step up their, act and put it through to the customers that, look, we are here to service you. We are here to, sell you a policy in case you're interested, and we can do the entire process digitally. So earlier, where there was a lot of requirement for physical submission of documents, I mean, the self-attested copies of a lot of your, your age proofs, your income documents, etc., were accepted digitally. So I think this just went on to, tell the policyholders, look, I mean, there is a need for us to not meet each other, not require you to come to our branch, and yes, we will do this digitally for you. So, well, with that respect, we've seen, customers, and at the same time, I mean, we've been speaking about this, that the awareness level of individuals wanting to buy insurance has also gone up. So both need to match. We cannot have a situation where people want to buy insurance, but they're not able to buy because the process is not, online. So I think there was a good merger of both the requirements, and we have seen this pick up. Now, I only hope that having understood that it is quite possible for us to actually entirely process an application online rather, let's not reintroduce the concept of offline things. I know of insurance companies wanting to ask, wanting a policyholder to walk into a particular branch while he wants to surrender his policy. I mean, this was a requirement pre-COVID times, where if a person wanted partial withdrawal of his money or surrender, the insurance companies would insist that the policyholder himself or herself walk into the branch. Well, if you could do that now entirely on a digital platform, through emails to your customer service, let's not reintroduce this concept after the branches open up completely. So answering your query, yes, there has been acceptance on both sides. In fact, policyholders, individuals have started accepting the fact that they can apply online, and the companies are accepting the applications, and also the claims and surrender applications. So let's just continue. This will be a better thing to do.
Customers are really spoiled for choice today. There's a lot of products on offer. There's a lot of types of products that are on offer. So, given that experience really matters when selling a product, not just insurance, what is the sense that you've gotten? What do customers prefer?
Ritu, initially it was more to do with age. Youngsters were more comfortable online. Elderly, I'm saying elderly beyond the age of 48, 50, who wanted people to be there. Now even elderly are slowly getting comfortable with digital, number one. Number two, digital is more where there is a good connectivity. If you go little away where there is a struggle for connectivity and internet option, still prefer agents coming to them. So we have majority of people not living in metro and they are still struggling.
We will continue this discussion. There's a lot more coming up, but we'll have to slip into a short break. We'll be right back.
HDFC Life and CNBC Awaaz present BIMA SABHI ke liye.
Okay, welcome back. Let's continue this discussion. Mr. Runga, with the digitization of distribution channels that we were speaking of, could there also be issues in data security or concerns for customers using, these channels to buy policies online? How are those being addressed at the industry level?
Anytime you're on a digital platform, you're going to be concerned about your data security. Now, frankly, there is not much choice. If you have to go onto a company's website, at best you will see the certification, you will see that HTTPS, the sign on the website. I think these are the basic things that you can do, and you'll have to go ahead with making the application. Of course, you have to exercise due caution. There is no doubt on that part. But this is going to be a challenge which is not only with insurance industry. It is going to be with your banking. It is going to be whether you're purchasing anything online or you're selling anything online. So I think it's just the matter of how careful you are, and all the regulators have been sending out messages saying that do not click on any link that is coming into your mail ID. Look at those basic elements. But yes, there is going to be a concern, and I'm sure that if you're careful enough as an individual, you can certainly ward off the absolute and apparent threats that you see. Of course, some which are, very well covered up and come to you. There could be some instances, but obviously you will buy through the reliable sources. You go to websites which are company owned and operated, not through some intermediaries or links. I think that would be the basic thing that you could do.
Mr. Gaurav Mashruwala, coming to you then, because of these evolving digital models that are now coming into play, how has it changed your role as a financial advisor?
Okay, Ritu, we were anyway not selling products. We are still not selling products. We are only into advising and for which we charge. So our role hasn't changed drastically. We kind of advise on the amount of sum assured required and the kind of product. And the client has an option of going and picking it up. The only thing we advise them is ensure underwriting risk is not on them. Because when it comes to life insurance, if it's online, couple of times we have seen that the person who's taking the insurance has to give a declaration that he or she is of a good health. Now, at the time of paying claim, if there are any shortcomings, there will be a problem with the claim. So what we have advised clients is ensure that the underwriting risk is with the insurance company and not with you. So you are not giving a declaration that you are of good health. Let insurance company find out and let them say you are of good health.
Mr. Vadami, since we're running out of time, briefly I wanted to check with you as well. What are the kind of partnerships that you as insurance players have to enter into, whether it is with fintechs or otherwise, to really lure customers towards some of the new products that you want to offer them, towards these digital services that you're using to better your service? So what are some of the partnerships you're looking at?
So, frankly, digital is something that we are looking at all kinds of partnerships, whether it's the traditional bancassurance, financial consultancy agency, or whether it's on the new ecosystems. I think we need to accept that in whatever we do now, the way we go around getting sourcing business or servicing customers in any industry will hinge around what kind of investments we have made on the digital front. So if you were really to look at it, it's not just because of COVID that there's been there's been a lot of adoption and usage, but the investments in terms of how we can look at our end-to-end processes, whether on sales and servicing, started long back, even for us at HDFC Life. And one of the reasons why we believe even in this current pandemic period, we have managed to grow in the industry is the fact that a lot of our processes which were earlier, being migrated to the digital have actually started working out for us right now. And we will continue to invest in technology. I think the question is whether you are able to bundle a very, very solid value proposition for the customers in terms of the product and then bring it along with, technology solutions and bring it along with an end-to-end, channel which is able to service them either through a partner, whether it's on the banker side or whether it's on the agency side and whether it's on the ecosystem side, where you are able to reach out to the customer and are able to bring him that value proposition and service him end to end.
The penetration of insurance in India is abysmally low. What can be done to target an ideal mix between digital and physical or otherwise where we can, target a much wider range of customers?
So I think I alluded it to the most critical thing, and very interestingly, not just the industry, the regulator also has taken initiatives in the introduction of standardized products. I think this is a great step where a basic life cover, a basic term cover, a basic health cover, and so on and so forth should be so simple that everybody should understand, and that's a product that pretty much the entire population should have. I mean, everybody should have that basic cover. And then as customers evolve, as your incomes rise, as your choices open up to you, your lifestyle evolves, you then go and buy, top-ups and specialized covers and, increase your sum assured to reflect, your earnings potential or future earnings potential and so on and so forth. So standardized products, simple products, this is something that I already alluded to earlier. Also, there is something called the regulatory sandbox, which has been introduced. It has been probably leveraged a little more by the non-life sector than by the life sector, but there is scope for innovation now. The regulator has actually given you a framework within which you can come up with products, test and learn and see what the market is accepting. And so that's again, a positive step in the right direction. we are seeing a fair bit of consolidation playing out in the industry. We will see, and it's not about whether there are more companies or less companies, but you want very, very strong, financially strong, solvent insurers out there who are able to invest. Digital is all very well, but digital, as my friend Suresh will say, is also expensive. You need to make significant investments over a period of time on the technology stack, as well as on training people, on driving adoption. So just the fact that digitization and insurance in a sachet, micro products, allows for a wider distribution of simpler and easier to understand products, I think is really what is going to drive the insurance penetration. One last point, I think beyond penetration, what is important is to make sure that the actual protection quotient goes up. So not just the fact that people have insurance, but the insurance is adequate to provide the right level of protection for the various uncertainties that life can throw up, for society, for businesses, and for individuals.
Products to get to a wider range of customers and more protection so that there's adequate insurance cover. Sandeep and the rest of you as well, Harshvardhan Runza, Gaurav Mashruwala and Mr. Suresh Badami, all of you, thank you very much for speaking to us today and giving us your time. With that, we wrap up this show. Thank you very much for watching.
HDFC Life and CNBC Awaaz present BIMA SABHI के लिए।